If you're serious about uncovering hidden gems before the market wakes up to them, you're in the right place. Welcome to Insightful Value, where we unpack undervalued companies with clarity and precision. Today's spotlight, DCC PLC. Yes, the stock is down, but is this just noise, or is something deeper at play? Before we dive in, this review is for informational and educational purposes only. It's not financial advice. Always do your own research. Now, DCC PLC isn't exactly a household name for many retail investors, but it probably should be. This is a diversified international sales, marketing, and support services group operating across four sectors: energy, healthcare, technology, and environmental. They're not chasing headlines, they're building essential infrastructure behind the scenes in over 20 countries. Their energy division, DCC Energy, is one of the leading LPG distributors in Europe and has been steadily expanding into sustainable energy solutions. Meanwhile, DCC Healthcare supplies medical products and services to hospitals and care facilities, and their technology arm distributes IT and consumer electronics at scale. But if they're so diversified and essential, why is the stock down? Largely, it's macroeconomic pressure, slower growth in Europe, inflationary costs, and a cautious investor sentiment toward industrials and distributors. However, from a value perspective, this dip is potentially a setup. DCC has a history of strong capital discipline, consistent earnings, and resilient cash flows. Their return on capital employed remains attractive, and they've been steadily raising dividends for over a decade. The payout ratio is prudent, and their acquisition strategy is methodical, focused on long-term value over flashy headlines. Recent earnings reports show steady performance with slight pressure on margins, but nothing alarming. Revenue is stable, and management remains confident in its outlook. They're actively transitioning parts of their business to be more sustainable and tech-enabled, positioning themselves for long-term relevance. Here's where insightful value comes in. We look beyond the short-term price action. We examine companies like DCC through the lens of long-term fundamentals, risk-adjusted returns, and strategic adaptability. No fluff, no jargon, just real insights. DCC PLC may not be a rocket ship, but it could be a compounder hiding in plain sight. If you're a long-term investor looking for stable businesses with upside potential, DCC deserves a closer look. Want more breakdowns like this? Head over to insightfulvalue.com. We provide in-depth analysis of undervalued companies, simplified and structured for real-world decision-making. Subscribe to our YouTube channel for more videos just like this and turn on notifications so you never miss an update. And if you want the full deep dive on DCC and many other companies flying under the radar, visit insightfulvalue.com.